Hi, this week we're joined by James as Jonah's out. So we're just gonna, business as usual, we're just gonna discuss the market a little bit. James's background is more cross barrel, so across the margin. So yeah, let's get to it.
Thank you for having me.
Cool. So the past week, post-election, the market settled a little bit. Data's kind of gearing up a little bit again. So we have a little bit of a bull play going on, which I do want to talk about. But what about cracks? Are you seeing much there?
From my side, the way I follow refinery margins and trade refinery margins, and they look okay. I mean, not that exciting, but I think reasonably robust. But probably the biggest thing going on is we're now coming out of peak turnarounds. So seasonally, turnarounds tend to peak around October, and we might have around like 4 million barrels a day of capacity coming back between kind of the peak in October to December. So, I mean, in my mind, we've got a lot of capacity coming back, and margins are okay. So I've been a little bit surprised that Brent hasn't been a bit stronger, and I would have thought spreads would have been a bit higher.
Yeah.
So,
well, do you think it should be in Brent, or you think it should be in the product spreads coming lower, maybe?
So I think there's a bit of a mismatch. So like the margins look good. So I am a bit bearish on the cracks coming into Q1. Like I think either product cracks and margins need to come down a bit, or possibly Brent needs to pick up a bit to kind of close the margin or reduce the margin from that side.
Yeah. Okay. So yeah, Brent has been an interesting one this week. I mean, for me, especially in dated, we had this. We currently are in the midst of a bit of a bull play. So I mean, from my perspective, it looks like a pocket of demand. I was always expecting this week to be, or last week, should I say, to be fairly strong, because we saw signals of it around a month ago where Chinese are coming in and buying this week in particular. So it wasn't too surprising, but I think the backstory of what's going on is a bit more interesting. So, I mean, we've had a lot of geopolitical kind of noise over the last 6 months. I think especially for crude specifically, eyes have kind of been on China. Now, I know there's some stuff in the news still going on about how I think they're increasing some costs to local refiners. I don't know if you've seen much about that, which is making it more favourable to keep products inland. But anyway, regardless, all this fiscal stimulus that is going on, it's really helped support a lot of the Chinese exchanges, so stocks, but also the crude exchange, INE. And, we've just been hearing rumours that potentially the prices on there have got quite high relative to where the kind of more Western exchanges are. So ICE or so Dubai, particularly on ICE, but also Brent and TI, which is allowing the market to kind of sell into the INE, which is physically delivered as well. So a lot more of the crude is kind of transacting through this INE contract at really high premiums, which is allowing kind of dated Brent Dubai to kind of have these knock-on effects. So I think we're seeing that now. And, as you say, we're going into kind of, out of turnaround. So we're expecting runs to kind of start picking up. So this appetite of crude is definitely coming back in. Right now, though, it feels very localized to the prompt. We've had this kind of run up on the physical diffs of around 40 cents. But you look at the Brent forward curve and it's barely changed. So for me, that's a signal for me to be bearish. I mean,
I've been a bit perplexed. I trade a bit further out, but yeah, say looking at like June deck Brent next year, it just feels oddly weak. So I don't know why. I mean, you mentioned China, and I guess we've been hearing as well, like anecdote, like demand's meant to be horrific. So year on year, demand for gasoline and diesel is extremely weak. So I don't know if that's kind of putting in bearish sentiment on the spreads, but from a margin perspective, it looks decent. So
what about seasonally, as in relative to last year or the year before?
I think seasonally they still look kind of, if you've got like a deck, I mean, especially if you're buying dips, so like I wouldn't necessarily go out and buy a deck June spread, kind of where it is now, but
Sorry, but I more mean the margins. Are margins particularly good relative to last year, or?
I think they're lower than last year, but we're coming out of a period where margins have been extremely high for refineries. So I think below last year, but on a historic seasonal basis, they're still pretty decent. And the refineries I speak to, albeit more European ones and slightly more complex, I think they think margins are okay.
Yeah.
So personally, I think with margins where they are, we're going to see a decent pickup in runs as we come out of turnarounds.
Yeah. So I guess the question is really, should Brent pick up or should products come off a little to help balance that out, right?
Yeah, and I guess we could go in circles on that. And
we could. And also structure's a big part of this. Like for me in particular, when I'm looking at dated Brent, I'm more focused on the first kind of 2 to 3 month spreads. And the main reason for that is because of how our curve prices. So it's 10 to 30 days out. It's very much a prompt market. Now, if we're looking at all the kind of competing grades, for me, the furthest cycle we trade out is West African crudes. They trade 2 months forward.
And how are they clearing?
They're doing okay. It's kind of been, fairly range bound the last couple of months. I wouldn't say it's anything really to talk about. Dubai's weakened a little bit this month relative to last month. It's mainly Chinese sellers actually. So we've kind of had European majors selling into INE and buying Dubai, which has proven to be a great physical trade. But where it means kind of the benchmark truly is, with it still being 2 months forward, is a bit, you can kind of take it with a pinch of salt, but it feels fairly balanced there, albeit quite a bit lower than last month. And then everything else is fairly prompt. We can still look at TI. That takes around 3 to 4 weeks to land into Europe. So for us, that's kind of the one that's in the focus at the minute, because all summer really we've been talking about TI tightness and how it's really helped keep the whole crude complex up. So this week in particular, it's the first time we've really seen TI spreads starting to sell off into expiry. So for me, this is going to be a huge indicator, because if TI does come lower and we've had this dated Brent rally, that should mean that these TI barrels need to clear into Europe. So for me, TI, Brent and freight is going to be a big part of my view on what I think the front Brent spreads are going to do. But you're totally right. Into Cal 25, it's a bit of a different picture, right? We could have, certain legislation moving that. We could have like true production numbers out of OPEC, etc., really, really moving that part of the curve. But for me, in the front, it's just not looking too healthy, to be honest.
It seems to be like the WTI. I don't know if that's a bit of a seasonal thing as well. Like it does tend to sell off. Like the WTI Brent boxes, like tend to come off into year end for some reason.
Yeah.
So I don't know if that's linked to it.
Yeah, a bit of. It has. Last year for sure. I can't remember the year before, but it feels a bit late to be selling off. But when it does sell off, dated typically follows it as well, because it just gets arbed out into Europe, which has to hit the dated Brent benchmark. So just looking at the two contracts together, if TI spreads are going to come lower, or the boxes, then dated also needs to come lower. And currently we have, really high dated versus Brent spreads, really strong dated versus Dubai. For me, it just looks like dated needs to sell off. So what we could potentially see is a bit of a flush. But then the only thing that kind of caveats that is we've still got this looming kind of what is going to happen with Iranian exports. Now, Iran crude typically trades 2 to 3 months forward. So if you're looking at, should I take Iranian crude, should I take WAF, or should I take Dubai? I'm sure most refiners are going to choose the latter two. Why would you there's no point in rolling the dice on something like that.
Well, I guess it depends on the price as well.
Yeah, true. But from reports anyway, I don't think Iranian prices have come off enough to kind of incentivize people taking a gamble on it. But that does mean that some production has been taken out potentially for contracts 3 to 4 months forward. So it might be that potentially the front flies get under a bit more pressure. But I do think we're going to be very kind of reactive to what's going on in the US. So last week we've had, freight softening. I think it's starting to find a bit more of support here, potentially as things are getting booked, to be honest. I think we're going to see quite a few TI cargoes come in the next 2 weeks. But ultimately, I keep, coming back to the same conclusion that I think dated Brent needs to come off.
Yeah, I guess we probably differ a bit on that view, but and maybe it does, but maybe my argument would be that some of the other grades maybe come off. Yeah, I still kind of wind back to like structurally the balance should be like tightening up.
Why do you think products should hold here? Because that's essentially what you're saying. If Brent has to rally, that means products need to stay.
I think
strong, right?
Products can stay where they are. Yeah, I don't think products need to products could stay where they were, and that still leaves enough margin for crude to kind of go up to products.
Yeah, but why do you think that?
Just looking. So I'm not necessarily sure that because we are still coming out. So runs should pick up, and that could then kind of feed through into weaker products. But everything staying where it is now, I think we need to see that pick up in runs first, which should tighten the. So I think crude needs to strengthen first,
and then potentially
products sell off. Yeah.
Okay. Yeah, I mean, I guess the argument for gas oil, especially or the middle part of the barrel, is we haven't even hit anything close to the weather we were seeing last year, right? So ultimately, that should help that middle distillate part.
Distillate. I mean, the East is strong, Europe's strong, but I think we're beginning to see signs that maybe that's weakening. So like the front distillate spread's super strong, but I don't know. Maybe that's kind of agenda based, but jet's finally gone back below diesel, so refineries should be shifting production from max jet to max diesel, which is quite an important switch. And also the US distillate is actually quite weak, so like we're still paying decent storage in the US for heating oil, and the HOGO, the boxes, so relative pricing, relative structure in the US versus Europe is extremely weak. So I think from the distillate side, it's kind of lining up. It's not happened yet, but it's personally I think we're due a sell-off on distillate.
Okay.
Gasoline's looking really strong, and the balance looks tight. Naphtha's kind of been wobbling a bit, but it seems all right. And then the fuel oil seemed decent. So yeah, for me, probably the disti looks like the most kind of questionable from a strength perspective.
Okay. And what part of the curve do you reckon that will hit?
I reckon it'll be reasonably prompt. So like probably like in danger of talking my book, but I think as we move, I've been surprised the very front, like the Deck Jan spread has remained as strong as it has, but I normally stay out of the front few spreads. But I think as we move into Q1, and like, yeah, I guess there's a question mark around the weather. If we get a very cold snap in the US, maybe that.
I think as well, like as we go into the holiday season, typically there are less traders on the desk really. So the ones that do have a position on, they're more likely to actually move the market, even if it doesn't necessarily make that much sense. Especially next week, we've got kind of Thanksgiving at the same time as Brent expiry. So that could be quite interesting because typically we get large moves when the US are out. So if we do get a correction there, it might mean that expiry prices a bit like kind of unreasonably. But what are you going to do? I mean, they're just taking advantage of the liquidity, right? So yeah, it'll be an interesting time. I mean, I guess maybe we can agree on kind of going short flies. I mean, I don't really want to.
So I guess that's the trade between the two of us.
Yeah, I can't really have that much conviction in going long. I mean, as I said, we've had a good bull play and spreads, if anything, are slightly lower. So it's a big red flag for me, especially going into Black Friday next week. I don't think anyone really has that much true confidence in the physical and dated. I've seen very consistent selling flow. As soon as you feel someone has some kind of physical exposure, they're right in offering down the market. So,
I think the market agrees with you. If you look at the forward spreads on Brent, I mean they're not strong by any yardstick compared to the last few years. So
yeah,
I think the market is pricing what you're saying. yeah, I've just been a bit surprised that that's the case. But
Yeah, I do expect maybe freight to get a bit more support if US cargoes start getting booked as well. We've had a couple of European grades get fixed into Asia as well, even on stupidly high data to buy. But, you know, they're going to do what they want to do kind of thing. But that should help support freight a bit, which might mean that TI Brent can come lower as well, because if we are going into a long market in the US, I think we should expect that to filter through into every kind of regional crude market. As for the products, I mean, as you said, it's kind of being led by the East, right? Eastern gasoline, Eastern diesel. Do you expect that strength to hold into the year end?
I personally think the US is going to export kind of deflation on distillate cracks. So I reckon Europe goes first. So maybe I'm bullish the East-West.
Okay.
But I think eventually that kind of translates through to Singapore cracks as well.
Yeah. To be honest, I'm bullish East-West crudes as well. I mean, I think data to buy is far too strong. I think we should get a correction, but it's going to be forced by the US. So let's see. And we still have, you know, kind of suggestions of what Trump's going to do, how that impacts flat price as well. But to be honest, I don't expect that to happen into
And
the
it will take a long
next
time
couple
as
of
well.
weeks.
Like, yeah, I think everyone was talking about how Trump coming in and like suddenly we'd have a load more crude production in the US. But
Yeah,
I think all of that, yeah, it takes time. And so many
exactly.
things can happen before that occurs as well. Like what's going to happen with Iran, you know, what's going to happen with like Russian negotiations. So yeah, it's hard to know how that will play out.
Okay, cool. So guns ahead, best trade of the week next
Best
week.
trade of the week. I'm probably bearish disty cracks, and I'm bullish kind of more deferred cruise structure, like
Okay.
beyond the front couple of months.
Cool. And short dated, obviously. Okay, cool. We'll catch up next week then. Thanks, James.
Thanks.